The strategies and concepts discussed are for educational purposes only and do not represent specific investment, tax, or estate planning advice. Investing carries an inherent element of risk, and it is possible to lose principal and interest when investing in securities. No strategy can guarantee a profit or prevent a loss. The views expressed represent the personal opinions of the presenter or featured guests, not necessarily those of USA Financial or its affiliated subsidiaries. Any opinions or forecasting statements are subject to change at any time and without notice. John Cindia is an investment advisor representative of, and advisory services are offered through USA Financial Securities Corporation, member FINRA SIPC, a registered investment advisor. Life Stages Advisory is not affiliated with USA Financial Securities. Life Stages Advisory, Dean or Remington, or any guest we have are not affiliated with USA Financial Securities. Welcome to episode 69 of WTF, Wealth, Tax, and Finances. I'm your host, John Cindia, certified public accountant and personal financial specialist. I have Dean and Remington in again today.
Hello.
Hi, guys.
How you doing, John?
Hey. Today, we're going to talk a little bit about the market and natural resources. From natural resources, what I'm talking about, we mentioned briefly in the last episode about some of the markets and stuff. When we talk about precious metals, one of them is copper, used in all kind of electricity. And with all the electric cars coming on board and the semiconductors that we discussed before, copper is going to be a major player. It's been up quite a bit already this year, and I think going forward, we need to look at it because it's also a component in the solar play also. And it's the major conductor of electricity that we've been using, and from the cheap standpoint, but it's getting more expensive. So there's ways to play it with ETFs, straight with copper or the copper miners, whatever from that standpoint. But when you look at the cars, I was looking at the electric cars have something, they're several miles. Do you guys know what that was? I was astonished from that. Several miles of copper in each electric car. Yeah, it's crazy.
Because those conductors are probably very, very skinny lines of copper that just go back and forth.
Oh,
yeah.
It
quick,
was crazy.
You'd mentioned the solar stuff. I think another thing that's leading to just the jack up in prices is that for some reason, and I know this has been a thing for a while, but like solar panel roofing, like entire roofing is becoming more and more of like a bigger thing. Like not everyone obviously has it because it's still kind of expensive, but I've been seeing that pop up like crazy.
That the actual shingles are the solar panel.
Yeah,
I guess.
It's a huge amount that goes into it, but it's becoming more and more, I guess, mainstream. But
I would think it'd probably be more in the southern states.
Oh yeah,
Florida,
for sure.
The Carolinas, things like that. Texas, California. We probably won't see it in Ohio.
No, probably not.
It's hard.
I mean, I've seen it around here. People with solar panels.
Oh, solar panels, but not the solar shingles.
Type
of
their
things like
entire
that
roof is just a big sheet of solar panels.
Yeah. If we've got it on the southern facing of your house and stuff, and it's not surrounded by trees or whatever, we used to go to Canada. I saw probably more solar panels in Canada than I did down here in like in Ohio and stuff. When we were going through there, which I thought was pretty interesting because, you'd think it's colder or whatever, but I think when you get farther up into Canada, even though they have lakes, they don't have like Lake Erie that's going to be cloudy and giving us here in Northeast Ohio a lot of overcast days. There was a lot more sunny days up there, even with the small lakes and stuff, that we didn't have that. So I think they've got more sun capacity that's not going to be obstructed.
Yeah. That's strange.
It was interesting from that standpoint. But copper was one of the things I wanted to talk about on the precious metals. The other ones was we'd spoken before about gold and silver. And I learned, I was reading an article a couple weeks ago about the season now. During the summer, there's a lot of weddings and stuff in China and India. China's got about 1.5 billion people. India's got about 1.4 billion. So you got just shy of 3 billion people. And out of that, there's going to be several weddings. A lot of families are having kids. So they have, in China, they give the couple that's getting married a lot of gold, and it's in jewelry, but it's not the type of jewelry that you can wear. It's not light type of jewelry. It's big, blocky stuff that's, some of it's come through the generations of the families, but a lot of it is being bought and given to them almost as like a starting dowry or something for them of value that they're supposed to keep. So if we start looking at it from a standpoint of not necessarily consumption that's being done for just regular retail jewelry, but something that's done on a larger scale during the summer months here, with billions of people looking to, getting married and things like that, the increase is going to be substantial, I think, on that. And the fact that when you're looking at the gold to buy as an inflation hedge, we talked about it in the last episode about inflation, that's really the only other place you can go. Crypto's not going to be, or it hasn't proven itself to be an inflation hedge as of this point.
You can't buy and wear crypto yet.
What's that?
You can't buy and wear crypto yet for your wedding?
No. Well, you probably could, but I don't know what that would look like. I don't want to have a blockchain around my neck. It sounds
like you'll be locked in.
Oppressive, yes, whatever. But I think when you start looking at it, it's a different consumption of gold, which is primary between India and China. And India has a lot of silver usage that they use too, but for the two of them, it's probably primarily more of a gold aspect, and it's cultural. So when you incorporate the cultural aspect into what we have in the United States from the standpoint of an inflation hedge, as other countries around the world have also done, I think then you have a substantial and a very good argument to start getting a position on gold, primarily silver, because it's more of an industrial use on that capacity. And I think silver is going to be something there too, from the gold standpoint. Also, we were looking at some of the stuff as far as lumber. I've got several contractors as clients, and one of them in particular was saying that last year he was buying 4x8 sheets of plywood for about $13 a sheet, and a couple months ago he told me it was like $56, $58 a sheet. So that's just because there again, when we were talking about shortages, part of it is shortages in the manufacturing because of the COVID restrictions that came in and stopped businesses from doing their production levels, laying off people, no one producing anything. So that has led to an increase of limited supply and an overabundance of money that was given out from the government, the PPP loans, the EIDL loans, and everything. So when you start looking at all of that money that's out there, you got all this money chasing too few goods. That's definitely going to contribute to the, hopefully it's a short-term situation, but it's going to take several months, if not the balance of this year into next year, to start making up to where you've got the ability to handle the capacity, let alone try and build up some type of an inventory from that standpoint. And now you see different numbers on the housing market. Housing is still down from what it was back in 05, 07, in that period. I think at one time we hit about 2.5 million housing starts. Right now, last I saw was about 1.2 is where we're at. So we're still down from that. But now you can't, it started to slow down, and I think it's not because of demand as much as it is because of lack of material. Some of the contractors are having to wait 2, 3, 4 months to get supplies, roofing materials, lumber, plumbing supplies,
John, I watched a couple episodes of Extreme Home Makeover with my grandmother last week.
Okay.
They built houses in 7 days.
I know. How did they do that? What did they do?
I wonder if there's going to be a rise to that whole 3D printing of houses that we've seen in the past, where it's like, it's not like they're printing plastic. They've got like a certain type of material to build like the blocks of it. 'Cause I saw they built like an entire, they built like a house in like 2-3 days, something like that, where they just print the whole thing. It's one of those huge things. It's probably really expensive right now, but
they have to still get the material.
Yeah, but like, I mean, it's cheaper than waiting for lumber to go down, though. I mean, I wonder if they'll try and find some workaround to that, or they're just going to wait it out.
Well, that'd be like back in like the 40s, 50s, 60s when you could buy houses in a catalog. You just buy the whole house.
Oh, yeah.
Yeah.
There was went through one about 5-6 years ago. It was probably a half a mile from my house. And
they're printing it with clay right now.
Oh, with clay?
Yeah, and they're building big houses with them too. I mean, they're nothing like crazy big,
Adobe huts. That's what we go back into the.
I mean, I'd live in one of those, but sorry,
look a little crazy. A buddy of mine told me about a house that was for sale, and it was I think it was one of those. It was in a Sears catalog or something. Mm-hmm. I can't think of the name of it. It was like an Avalon or some goofy type of name that it had to it, and it was all metal, and the walls were metal, the outside was metal. You just get into it, all the cabinets, everything was metal. It was just weird when you went into it and everything. Can't think of the name of it. Anyway,
somebody built a house out of Legos, and that might be cheaper than waiting for lumber to go down too. So I might do that.
What's the safety behind something like that?
What, the metal house?
Just anything in general. I mean, the Lego house, the 3D printed house.
You get a bad storm
metal like
through, and your
I
house
feel like a
goes
metal
away.
house is also not very safe.
Well, you're going to have the insurance company go through it, see if they even want to.
The house is just a giant lightning rod.
If they're going to turn around and even want to insure you on that.
Is it like drywalled on the inside?
What's that now? The metal house?
Yeah.
From what I recall, they had some type of insulation in it, but it was just weird. I mean, you didn't put nails into it.
Right.
You'd have magnets. So you want to put something up, you had magnets on it and stuff, and it was just, I can't think of the name of it. But anyway,
some research.
it was just a prefab house, and they bought it out of there. It was like $5,000 or $8,000, $10,000, depending on you wanted a 1, 2, 3 bedroom home. I think they were mostly ranches. I don't think they were 2-story. I could be wrong on that, but it was just totally bizarre. And
people
it was up for sale.
Containers too.
Yeah, people were up. It was up for sale, and somebody did buy it. But there was a lot of restrictions on it that a lot of lenders wouldn't lend on the thing just because it was because of the age of it and everything else. There was a lot of things that needed to be, repaired and updated on it. And I don't know how
get it up to code and stuff too.
Yeah. It was just weird. But you have to really think about what the going forward, what's going to happen with a lot of these developments. There's so much building going on, even around here, that when we were down in Florida, we talked about in Clearwater, it was probably 15, maybe 18 years ago, there was this one huge hotel that was at the south end of the beach. And where that is now, there's a brand new one. They tore that one down. There's a new hotel. But when that hotel before it was knocked down, all it was rocks. And then you would go over the Sandkey Bridge, maybe, I don't know, 400, 500, 600 yards down from that. Now, this new hotel is where the old one was at, but there's 4 or 5 more hotels. A JW Marriott's going in at the very end of this, and there's a plaza in between that where all these rocks. So I don't know what they did. They built something else, but they're going straight up in the air with all this stuff, and there's no room to put anything. So in order put anything else on. You got to buy something, tear it down, and put something else up.
Yeah, I think you're going to see that a lot just in the normal suburban market too, because people are not going to want these 70, 80, 100-year-old homes when they can buy that for a decent price and build what they want.
And we had one of the banks that merged with some other ones, and they had a branch bank just down from our house, and I don't think it was 8-10 years old. They tore it down and built up one of the dollar type stores that go in discount stores. So they tore the whole bank building down, and then I'm sure they sold it to them, obviously, but they tore that down and then built one of these little dollar type stores in there. So
strange.
Yeah,
it's strange.
But when we're talking about some of the other natural resources and stuff, I think there's a portion in a portfolio for that. There again, if you're looking at precious metals, I try to keep it 3 to 5%. Natural resources could be anywhere from maybe 1 to 3, 4%. So if you're looking at any direct plays with lumber or anything, or oil and gas, I don't look at it from a natural or natural resources play. I look at it more from, are you dealing with some type of a gasoline, like a refinery company? You're looking at huge oil companies that provide not only the drilling and the refining and the distribution, but do they have the actual, on the distribution side would be the actual filling stations and everything from that. But you really only have about, I don't know, a handful of huge players in that. But then you see all these other tanker trucks going around. Well, they're all, private labeled and everything else. So you don't really have 50 different gasoline companies. You've got a handful.
5. Yeah.
You got a handful, and
they
the
all
other
go,
ones,
they all
you're
go
getting
under
the same gas. Yeah.
Yeah, they all go under one blanket name.
Yeah, but somebody says, "Oh, I like the gas over here, man."
It's the same.
It's the same one as yeah, exactly. They just put a different octane level and whatever else is in there.
Put a different color on your truck and
different
you've
decal.
Been fooled.
Different decal, and you've got something else there. Anything else that you guys are thinking about on the gold and silver or copper or anything, natural resource, lumber or anything?
No, I think that's pretty interesting from the wedding standpoint. How that can even affect the gold and silver, whether it's availability or the market price or whatever, just by people getting married.
Yeah, because over here, you buy nice jewelry or something. You go to a jewelry store and retail sales, and you've got a lot of these other discount jewelers and stuff, and they're going to use gold to a certain point, but they're not using pure gold. But when you're looking at the Chinese and the Indian cultures and stuff, they're looking at pure gold, and they're looking at chunks of it, and they're looking at huge
I looked at
pieces
pictures of it. It is like almost head to toe gold.
Yeah,
it's ridiculous.
So when they buy that, they're not using that like Mr. T would. Is Mr. T probably still living off of his? I don't know, but when you end up having that as, like I say, it's sort of a starting off point for that couple, and that they're supposed to maintain that. I'm sure they're using some of that for financing or collateral, that they have, and the families give that to them from that standpoint. But then when you look at it, it's just different from a cultural aspect as opposed to an industrial or retail situation that we look at over here.
Oh, yeah. Another thing that's weird that we were just talking about, like natural resources and stuff like that. I looked up helium just because I was curious. With everything that happened with COVID, all the stay-at-home mandates, the helium shortage temporarily has stopped because you didn't have people throwing crazy parties or going to crazy events that had all the party balloons and all that, which is weird to think because it was expensive back in the day, but now it's kind of fizzled out. It's not as expensive. We don't have this shortage.
Because we got too much helium because nobody threw a party.
Yeah, I wonder if once everything opens back up, if that's going to
I'm throwing a party.
He's going to throw a crazy helium party.
I'm buying a whole helium tanker.
I just wonder how long that's going to last once everything opens back up.
Well, and see, that's the other thing is, when you have the opportunity to really look and dig into different types of the stock market, what are the opportunities that COVID give you? What did they take away and had shortages of? And then what did they give us from the standpoint of oversupply because we didn't use? And, there again, we're going to have a disconnect in the markets. And it's interesting. That would be one of them to look at and say, okay, is there a play on that one? So you start looking at these, and these are these value type situations when you can come in that something has a high intrinsic value or it's worth a lot, but for some reason, whether it's the economy, whether it is the industry or the sector, and there's a huge difference between what the actual value is and the actual price to pay for that, whether it's higher or lower. So if it's higher, can you short that? Or if it's lower, can you play it, get a long play into that and to buy that up? So we're looking at different things here to make you start thinking a little bit on your own as opposed to just listening to the talking heads on the TV stations or over the internet or whatever, and trying to be a little bit more rational about what you're looking at and have an actual direction or a reason that you're in the market, a reason you're out of the market, or a reason to play it. And then once you do, like Dean had mentioned a couple of times, probably because I drilled it into his head, an exit strategy. When do you get in, when do you get out? You can have something that's targeted, as long as it goes up 10%, I'm out. 25%, 50%. The one guy that you had talked about was a couple $100 stock. He wanted it. As soon as it went to 10,000 a share, he's going to get rid of it.
Yeah, when it gets
probably
up there,
not a very logical exit strategy from that standpoint.
You got in, how are you getting out?
Yeah. And he got in because everybody else got in.
FOMO.
Yeah. Didn't have any reason that he wanted it. Probably never heard of it just because somebody else said so. But anyway, that'll wrap it up for this week. You can reach us on YouTube. Like us, love us.
Where can they email, John?
They can email me at jcindia@lifestagesadvisory.com or our website, lifestagesadvisory.com. And if you have any suggestions, topics, anything you want to hear, don't be afraid to shoot us an email. Let me know, and we'll put that on the agenda for upcoming episodes. And thanks again. See you next time.